I would like to live this philosophy in whatever business we do.
करते हैं गोल्ड लोन मेला। गोल्ड लोन लेने पर पाए सुनहरा मौका कपल्स के लिए फॉरेन ट्रिप जीतने का और साथ में जीते कई आकर्षक इनाम। यही नहीं, हर ट्रांजैक्शन पर होगा 24 कैरेट गोल्ड आपके नाम। अपने फ्रेंड्स और फैमिली को रेफर करने पर भी मिलेगा खरा सोना। गोल्ड लोन लेने के लिए आज ही मुथूट फाइनेंस की ब्रांच में आए या फिर घर बैठे बैठे गोल्ड लोन पाए। आज ही कॉल करें 1800-313-1212।
And welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and with me, as always, is Cheryl D'Souza. And Cheryl, this show is for all our viewers who want to get an expert take on the stock queries. So viewers, do get ready. We'll come to you shortly. But before coming to that, let's have a look at what the markets are up to. So Cheryl, looks like a tiring Tuesday for the markets after the stellar rally we saw last week. But nevertheless, Nifty still trying to hold on to 18,600.
Absolutely. Actually, if you see, we started the week also on a very somber footing. If you look at the way how yesterday's trading session also transpired. Today as well, you have markets that are weak, but let's see, towards the second half of the trading session, what sort of a recovery we are able to pull. But for now, if you look at the advanced decline ratio, it's actually, if you look at the way how it is, it looks like it is pretty much balanced out. If you look at the Nifty and the Sensex, they're down 0.4%. This Nifty Bank is down about 0.3% as we speak. The top performers in yesterday's trading session, the metal sector today is under immense pressure. So if you look at Tata Steel, Hindalco, JSW Steel, all of them are top losers on the Nifty as we speak. Talking about the gainers today, you have Adani Enterprises, HUL, Britannia, all of them seeing good gains. Actually, even yesterday when you saw the recovery that was led to the second half of the trading session, you actually saw a lot of these FMCG names pick up steam. So today also, you have them actually ruling the charts on the Nifty. Let's talk about what are the sectoral indices doing in today's trading session. Metal index, like I said, top sectoral loser in trade, down about 1.7% as we speak. IT index is also following it, is down about 1.5%. Metal pharma index is down about 0.7% as we speak. And on the flip side, PSU Bank Index, once again, top sectoral gainer, 1.5% uptick coming in for that particular sector. And if you look at the broader markets as well, Shrishti, today, they are also seeing a bit of weakness, but not as much as the benchmark indices. So this is how the market setup is looking like for Tuesday. Like Shrishti said, looks like it's a tiring Tuesday for the market at least.
Well, yes, absolutely. That's all about the markets. But let's move forward, and it's time for BNSN Lens. And today we'll be focusing on the textile stocks, because on a YTD basis, if you see Indian textile companies that have corrected quite sharply, and even the global cues are not turning out to be that much positive. But is there any silver lining out there? And is this a time to bet into all of these textile counters? We'll be focusing on that. But before we come to the expert take, let's have a research on this. And we are being joined by our analyst, Vamakshi is joining us to tell us what's all happening in the textile sector.
Well, absolutely. Let's first start off with some of the global trends that we're seeing among retailers. Now, in the US in the third quarter, top US retailers have seen heavy discounting as well as markdowns in order to clear inventory. They're also witnessing a sharp slowdown in sales momentum in the month of October and November. And in fact, they also highlighted that consumers are preferring to downtrade or buy in bulk. As far as the UK is concerned, retail sales are also seeing sharp fall in volume in the month of November. And they believe, that is the Confederation of British Industry believes that the pessimism is expected to remain over the next 3 months. Now, what is this impacting? Well, exports are down. Overall, when we look at the garment exports, they remain slow. They were down nearly 18% on a year-on-year basis in the month of September itself. Even the cotton ready-made garment exports that were reported in the month of September were at the weakest level since June 2021. Apart from that, we also saw that Indian cotton was relatively expensive compared to the Chinese cotton, which in fact reduced the cost competency of garment exporters. But despite all these negatives and a dark cloud, there is a silver lining to this, that is the FTAs that are on the table. Now, if you remember that India signed an FTA with the UAE on May 1st, and after that we saw that the overall exports from India to UAE rose by nearly 18% from April to October. Negotiations apart from that are also on with the EU, that is the European Union, the UK as well as the GCC. ECTA with Australia has also come into force and will be coming into force rather on December 29th. So apart from that, new FTAs are definitely one trigger ahead, but cooling cotton prices and the potential PLI 2.0 textile scheme will also be a factor that you should be watching out for. But we also have analysts from BNK Securities which say that the negatives are largely priced in. They believe that the shares may remain range bound given the slower demand environment, and the valuations for these counters have bottomed out. So that was the textile sector for you. Subdued global demand outlook, but cooling cotton prices and potential new FTAs emerging as positive triggers for this sector.
Thank you so much for that, Vamakshi, for actually putting into context what's exactly happening with the textile sector. Why are we focusing on the sector? What are the positives? What are the negatives? And what are the stock performance like? But let's bring on board our guests for today. We have Kunal Bothra as well as Rajesh Agarwal joining us on the show to talk to us about what are the prospects of textile sector going ahead? How do they envisage the sector technically as well as fundamentally? So good morning, Kunal, as well as Rajesh. Thank you so much for joining us on the show. Rajesh, coming first to you, you had Vamakshi actually beautifully outline what's exactly happening in the textile sector, be it the global outlook or even the domestic outlook for that particular space. Where do you see value in the textile space? Do you think that it's a good sector to invest in over the longer term, given the fact that this is a part of a human nature or need of human nature? So where do you see textile sector headed from here on?
Morning, Shail. Morning, Kunal. We believe that textile sector is good for long-term investment. As it is said that clothes makes a man and textiles makes a portfolio. So as far as textile goes, we are bullish on that sector, despite the fact that in the near term there are problems because of rate hikes, inflation, rate hikes, and the impending fear of recession in the US and European countries. Thereby, there are fears that exports may go down. But despite that, Indian textile industry, which is worth 140 billion, has been growing at more than 8% CAGR, and this growth is likely to continue in long term, as buyers are looking for alternatives to China. And India has an inherent strength in textiles, no doubt on that. And recent government initiatives are another positive factor. And the best part is India has a strong presence across the value chain of textiles. And not to forget that in the latest correction, valuations has turned attractive. All the negatives has been priced in. And we believe that going forward, in the long term, exports will again start. These companies are going to perform better. And if I have to pick one or two stocks in the entire sector, I will go with first, of course, would be Vardhman, and the next one would be Welspun India.
So that was all about what could be the likely tailwinds for the sector and the stock that Rajesh is liking. But Kunal, coming to you, if we see all of these counters like KPR Mill, Welspun, Arvind Limited, and even Vardhman Textiles, they have corrected between 20 to 40% on a YTD basis, while Nifty is up 6% during this time. Any of these counters where you feel that the selling has been absorbed till now when it comes to the technical charts?
So good morning, everyone. My belief is that Arvind is one of the better stocks, poised at current levels. I think the stock is at 100 or just crossed at 100 levels. And when you look at this from the 2020 recovery, the stock, which was almost at 20 rupees, had gone up to almost 130, 40 plus over that kind of a time span. And then from there, it corrected. It's now making a comeback again, coming back about the 3-digit mark for Arvind. So I would believe that this is one of the most stronger names. In fact, even if you look at the last 5 days or 7 days of price performance, then Arvind Mills has managed to show a relative strength compared to the likes of Vardhman Textile and Welspun, etc. So I would be of the belief that it always makes sense to go with the stocks which are riding on high momentum, because that's where the markets would probably want to give more premium. So Arvind is a stock which I would pick even from current levels, and I would probably expect maybe 115 to 120 as a broader target range for the stock over the medium to long term.
All right, so that's the view coming in from both of our experts, Kunal as well as Rajesh, on the textile space. And Arvind is among the top favorites for Kunal on the charts at least. But on that note, we'll actually slip into a break on this edition of Buy Now Sell Now. But viewers, stay tuned, because when we come back, we will come back with your favorite part of the show, and that is the queries.
Copawat.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money.
Welcome back. You're watching Buy Now Sell Now on ET Now, and this is a show where we get you queries answered, all your stock-related queries answered by our experts. And today our experts are Kunal Bodhra as well as Rajesh Agarwal. But Rajesh, before I kickstart with the query segment, markets have rallied quite a bit, hitting fresh record high levels since the last time we spoke at least. And from there on, now the markets are taking a pause. What should retail investors do now to protect their wealth, which they've already created, or looking to create some more wealth? What are the precautions that they should keep in mind?
See, one should stick to their investments, one should stick to discipline. They should not try to time the market. In an ideal world, you would be able to buy investment just before they increase in value or sell before they fall. But the fact is no one knows which way the stock market will move next. So trying to predict markets up and downs would mean that you end up buying or selling just at the wrong time. I know investors who have sold everything when market fell in March 2020, and then they bought some and sold at around 20,000 levels, thinking that they will buy again when they will fall, and they're still waiting. And market are touching new highs, almost 19,000. So it's better not to time the market. Do your research. If the stock is overvalued, sell. If it is undervalued, buy. That's the only theory. It's, just don't try to time the market. Nobody knows where it will move next.
Right, that's the sound advice coming in from Rajesh. But with that, let me kickstart with the query segment then. Remember, viewers, this is a show where we get you answers for all your stock-related queries. We are live on Twitter, YouTube, as well as Facebook. You can write into us on those platforms or on the WhatsApp number that's flashing on the top of your screen. Do remember to mention your name every time you write to us, because it's really difficult for us to keep or remember every viewer. But yes, do mention your name. Do mention the stock that you're looking to purchase, the time horizon that you're looking to hold this particular counter. If you're already entered, then do mention your buy price as well as the quantity that you've purchased. In that way, our experts will definitely be able to help you all better. But let me get the first query then, and this is coming your way, Kunal. Humaira Sheikh has written to us, 400 shares of Rail Vikas Nigam at 73, Zomato 500 shares at 67. She's facing losses in both of these counters. What should she do?
So I believe, I think for RVNL, the stock, I think the recent high was around 80-82, and I think it seems to have entered the fag end of the territory for the stock. I would believe that the stock may correct a bit more from current levels of 69-68, where it's currently trading right now. So I think if you're looking to add or average, then I believe you should wait for at least another 10% correction for the stock. Say maybe closer to 60-62 is a good zone to try and buy the stock or look to average. So I would suggest I think that should be a strategy for the stock.
Okay, the next query coming in from Subrata Mukherjee. He's already having HCL Technologies and Infosys in his portfolio and looking to add more IT names, Rajesh, like TCS and Tech Mahindra. Just yesterday on BNSN Lens, we discussed about the IT stocks, what's happening in the sector. But is this a good time to add TCS and Tech Mahindra?
Yes, as I said, you should not time the market. If it's a long-term horizon you are looking at, when both these counters are good enough. But what I would suggest is, instead of going for 4-5 stocks in a single sector, why not increase your position in the existing stocks which you have, right, like Infosys? But I won't say that TCS is also TCS is bad. TCS is also very good. The valuations have become attractive. And not to forget the TCS, Infosys, these kind of companies come out with regular buybacks and good amount of dividends too. And as far as Tech Mahindra is concerned, with the 5G launch and all, I think this company is also going to be benefited. Valuations are attractive in the entire IT pack, I would say. So both these can be added.
Okay, this one is coming in from Soumitra Joshi. He wants a view on Varun Beverages. What he is mentioning definitely is the fact that it's been a multi-bagger, a big multi-bagger in the last 1 year. But he wants to know, is it time to book profits out of it? And also he wants a fundamental view on future growth. So Kunal, first, quickly, what should he do? The fact that he's mentioning it's been a big multi-bagger, which means he's made good profits on his holding in Varun Beverages. So do you think that the charts are indicating that now is the time to book profits out of this counter?
Well, yes, I would suggest to book profits.
And what's your take then, Rajesh, on the fundamentals of Varun Beverages?
See, fundamentals are very strong. I remember a long time back, given as a buy call and ET now only at 3 figures, maybe 150, 160 odd levels. But that's a long story. Going forward, this is the only largest Pepsi refiller in India. Not only in India, it operates in Sri Lanka and Nepal too. The numbers have been good. They are moving out of non-carbonated drinks, more focus on non-carbonated drinks, I would say, on juices and all. And that's going to add to the number. But yes, the valuation looks stretched at this point of time. One can exit and maybe re-enter at around 1200, 1150 odd levels.
Okay, the next query coming in from Divya. Actually, Divya parents are holding 2,000 shares of Karnataka Bank from a price of just ₹10, and that's an example how you reap the benefits over a long-term horizon. But Rajesh, coming to you, for Karnataka Bank specifically, we have seen a great rally in this particular counter along with the other PSU names recently, but every time this counter tried to retrace back from 170, 160 odd levels. But this time around, the kind of fundamentals that are shaping up for sector or the company, should she expect to have more returns from this, or is this a time to good profits?
See, I think one should carry on with investment because one, her cost is very low, so there's a comfort zone there. Otherwise, also, if you look, the fundamentals are strong, but trading at a very low valuation. The numbers have been quite good. And not to forget, this bank doesn't have any promoter as such, and it can be a takeover target in future. So one can carry on with one's investment for a target of maybe 180, 185 levels.
This one has come from KR Balan. Kunal, this one is coming your way. Brigade Enterprises and Powerhead. He has both of these counters and making 10% profit. Or rather, sorry, he's making 10% profit in Brigade Enterprises and 0% in Power Grid. So now he wants to know what should he do? Continue to hold on to both of these counters or look to shift to Birlasoft or, for the matter of fact, any banking name. So currently, he is in a diversified portfolio is what KR Balan has actually for the last time that I've been checking his queries. So Brigade Enterprises, Power Grid, shift from those to Birlasoft or to banking names.
So for Brigade, I think it's a good 10% gain which you have. It makes sense to now shift towards a few dominant large cap names just from the construction of the real estate pack. So I would look at maybe Nobira Realty or even DLF at current levels, or maybe you can probably add them on dips because of the recent rally these stocks have shown. But then I think that's a good change of guard which you can do for stocks in terms of Brigade. And for the other name as well, I think shifting to Birlasoft may actually not turn out to be a great bet. Power Grid, for example, has been a historically very sideways kind of a stock. It's a very low beta name. Now it makes sense to shift to maybe another PSU over here. So some of the names, for example, which you've been highlighting time and again, the likes of BEL, HAL, they are much better, much stronger names which have managed to show signs of rally, consolidation, and then a breakout back again. So it makes sense to shift from maybe something like Power Grid to maybe a BEL or an HAL.
Okay, BEL and HAL is something that Kunal is liking. But the next query coming in from Tapas Chandra, and Rajesh, he's looking to add Uno Minda at current market prices for the next 1 year. Looking at the sort of rally that we are seeing in all these auto ancillary names, will Uno Minda be a good bet? Because since the month of September, the stock is seen to be trading in a quite tight range.
I think auto ancillaries are going to do well in the long term. Not to forget the kind of numbers every month we are witnessing in car sales, auto sales. In the current month also, we have seen auto sales being exceeding 3 lakh mark. So these are going to do well. But I think, Minda is already on optimal level of its valuation. One can switch to LG. Balkrishnan is trading at a PE of less than 10 forward earnings, and it's almost debt-free. Company is doing well. So there are better names in auto ancillary space where one can switch.
This one is coming from Santi, and this one is for you, Rajesh. A bit of a longish query. He's saying that because of China +1 and proposed Europe +1, the Indian chemical companies definitely rising the capex to increase the production in coming years. Therefore, what are those companies that could benefit out of this capex spending in the top list? So he wants to know which sort of companies that he should look at on back of these capex spending, especially in the chemical space.
See, there are a lot of names, and the fact remains that they have corrected quite a lot in the recent past, so valuations have become attractive. If somebody is looking for a horizon of 12 to 18 months, I think Deepak Nitrite, Lakshmi Organics, Archin Chemicals, they are some of the names where one can have a look at.
Next query coming in from D. Mazumdar, and Kunal, he wants to know from you that he has bought IEX and Bandhan Bank. IEX purchase price is 258 rupees per share and Bandhan Bank at 341 rupees, and in both of these counters he is facing heavy losses. He wants to know, is this a good time to average out or maybe hold on to these levels? Any signs of recovery out there?
So for IEX, I would believe that it's a good time to try and maybe add on. I think time and again I've been advising that 125 to 130 approximately is a major level of long-term support for IEX. The stock had bounced off from those just about the 130 mark for itself, and now come back towards 148, 150 levels. So maybe 148 could be a starting point for you, and in case if the stock dips closer to that 130 mark, which has been a huge support point, that is the point where you can look to average further for IEX. And for the other name which you've mentioned, Bandhan Bank, I would be a bit circumspect on the stock price trends overall, because Bandhan Bank has been one of the few stocks which has been beaten down significantly. So when these stocks, they tend to rally, you have to take it with a pinch of salt that these rallies may be very short-lived for stocks which have been into a major downtrend for themselves. So I think it makes sense to shift from Bandhan Bank to some other top quality large cap banking name. So I would suggest maybe an SBI could be a better alternative at current levels.
Okay, so that's the take coming in for you, Mr. Mazumdar. But for this, it's time to slip into a short break. But viewers, don't go away. Coming back, we'll be taking up more of your stock queries, so stay tuned.
It's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like
Welcome back to Buy Now, Sell Now. Let's keep it going with your stock queries. And the next query coming your way, Rajesh, is coming from Sudha, and she wants to know whether is it a good time to book profits in Gujarat Fluoro and enter into Manappuram Finance. What's your take on this?
See, Gujarat Fluoro booking profit is fair enough. It's run up quite a lot, it's taken a profit, book profit, and wait for some correction to re-enter because it's a good company for long term. But as far as Manappuram is concerned, I won't suggest entering into that at this point of time. Maybe a V Capital or Poonawalla Finance could be a better NBFC to get into, or even a Bajaj Finserv for a longer term horizon.
Right. Kunal, I have a query for you, but before that, I will, even Humaira asked about Zomato, 500 shares of 67. She did highlight that you missed talking about that particular stock. Where do you see Zomato headed? She's making loss definitely on that one also.
No, I think you should hold on. Yeah, I missed out on answering on Zomato, but I think you should hold on to Zomato at current levels of 64, 65. You know, the stock is trying to establish a range for itself where it's going to spend some bit of more time, and that range clearly is just around that 60 mark as a support and closer to 68, 70 as a resistance. So you've seen that in the last 2 or 3 months there have been 2 or 3 attempts to break below the 60 mark as well as go above the 70 levels, but the stock tends to quickly come in to both of these ranges back again. So I think sub that 60 levels or closer to that 60 level, if you buy or if you happen to average, that could be a good opportunity. And maybe it's 68, 69 or closer to the resistance is where you should look to book out profits. So if you can probably trade for another couple of months, that could be a better strategy for Zomato.
Okay, the next query coming in from Sandeep, and Rajesh, Sandeep is holding 100 shares of Nureka from a price of 1,000, and his investments is just half in this time period. But if we see this particular counter, it's at all-time low. Any signs of recovery or any fundamental triggers that could work well for the company?
Which stock you said?
Nureka Limited.
Sorry?
Nureka Limited, one of the recent listings.
Not getting your voice,
Okay.
Rajesh, the stock name is Nureka, N-U-R-E-C-A. All right, we'll come back to that one then. Let me take this one to you, Kunal. Then Sri Kutan he's holding 100 shares at of JB Chemicals at a price of 2,000 rupees per share. He wants to know about the short and medium term view.
So I think it's a good stock. In fact, I tend to like the stocks which have a very slow, steady pace for themselves. JB Chemical is actually one of the stocks. It managed to break past about the 200 DMA, I think, in the month of June, July, where the stock had broken past about the 1650 or 1700 mark. And from there on, it's not looked back. And since that time, the stock has not even corrected or retraced back towards the 200 DMA. It tends to have a tendency of coming towards the 50 DMA and then bouncing back again. So if you're already holding the stock, you should continue to hold on. If you're looking to buy or add or average, then I think closer to the 50 DMA, which I think at current levels is at 1970-75 for the stock. That's a better level or a good level where you can look to add or average.
Okay, that's the take coming in for this particular counter. But Rajesh, coming to you, the stock we were talking about is Nureka Limited, the one that got listed in February 2021. Are you able to get that stock now? Okay, I think there's some audio issue. But Kunal, if you could help our viewers on this thing, because we don't have so many points for this particular counter because of the recent listing, but any take on this?
So, it's a stock which has been beaten down significantly, because when I look at the charts, and even if you look at it on the candlestick basis over the last 1 year approximately from the recent history, there are many red candles for the stock. Now, it's off late, and I'm talking of the last 1 month approximately, that the volumes have surged significantly for the stock, but the sell-off has somehow halted for Nureka. So the stock would now get into a phase of a time-wise correction. What you should ideally be looking out for, a phase where the stock rallies, and maybe the rally could extend to 600, 650 levels. If that happens for the stock, then it's time to establish a base around this 500 mark where it's currently trading. So I would suggest to wait and watch. Wait out for a rally, let the stock rally up another 20% from the swing lows the stock has created, and whenever that happens, that could be a point where you can look to establish a strong buying zone for the stock. But till that time, you should maybe just keep it under a wait and watch list.
Right, we'll try to connect with Rajesh in a short while from now. We are actually facing some sort of a technical issues with his line, but Kunal, this is from Satya, and Satya definitely is following your tick-by-tick move. This morning, in your today's trade, you had mentioned that you would book profits in IDFC First Bank, and he's asking, is it time to book profits? Because he's watched the show, the market show, where you did say that was your first trade. He's a long-term investor. So now what he wants to know, what should he do with his holding in IDFC First Bank? I believe the fact that if he's mentioning that he should also book out profits, which means he's already making profit on that holding.
Absolutely. So I think yes, there are two parts to every kind of a trade. You look at it from long-term play, or you're looking at it from a swing trade of 5% to 10% kind of a swing trade, which happens in a short span of time. The reason why I've mentioned a book profit on IDFC First Bank is purely on the back, that the recent rally is now getting into a bit of an overstretched zone for IDFC First Bank. There could be an eventual cool-off. Maybe the stock can come back towards 57, 58. So, it's always better, and I think I just gave a recent example for, a stock like Zomato, for example, where a stock tends to come back toward the higher point of a range, spends a lot of time, corrects, and comes back to the support point. So it's better to try and have a contrast stance, and that's the stance which I have for IDFC First Bank. Specifically from a trading play, you should book profits over here if you are a trader and look to buy back again, maybe closer to 57.5.
So his buy price was 51 rupees per share. So this strategy remains the same, right?
Yeah.
All right. Shruti.
Okay, let me take the next query from Ankit. He's from Delhi, and Rajesh, he wants to know from you that what to do on Coromandel International and what's the view coming in on a long-term perspective. Ankit is holding the stock and is holding 1,000 quantity from a price of 940 rupees a share. And we have seen the stock moving above that 1,000 levels, but have corrected from those levels. What's the view? Going forward, should he expect some rebound?
Of course, yes. It's a long-term hold, not only a hold. We have a buy call on this. The company is doing very well, belonging to the Murugappa group. The numbers have been good. Balance sheet is clean. And if somebody is looking for a safer space, I think one can even buy EID Perry, which again holds almost 55-56% in Coromandel International. That way you have hold of the sugar business as well as Coromandel. But since you are already holding, continue holding.
Right, let me take the next query, and just so that I can accommodate, and we both, Shrishti and I, can accommodate as many queries as possible, we'll try to limit your queries just to one stock and not two stock, because we already have a lot of queries pending. This one is coming from Akash Mathur. Kunal, he's holding Easy Trip at a price of 57, BLS International at a price of 365 rupees per share. He wants to know whether he can add some more at current market price. His outlook is for the next 6 months, either Easy Trip or BLS.
I would suggest to not to add at current levels of both of these stocks. In fact, for Easy Trip, if you can get a rally maybe around 60-61, that's a good time to book profits. And for BLS International, I think a better level to average would be around the swing lows, which is around 340.45 for BLS.
Okay, the next query coming in from Manoj, and he's from Doha, Qatar. And Manoj, we hope that you are enjoying the World Cup. But coming to your stock queries, Rajesh, he says that he's a beginner in stock markets and he's looking to invest rupees 5 lakhs in Tata Motors for the next 1 year. And if we see the rally in the auto stocks, Tata Motors was one such counter that did not see that great a move in this particular year. But going forward in the next 1 year, any hopes for good gains in this particular counter?
See, if the market moves up, Tata Motor will also move up. But fundamentally, I don't find any reason to believe that this is going to outperform the auto space as a whole. And being a newcomer, I don't think it would be a good strategy to put all your money in Tata Motors because it's not performing the way it should. There are issues on the JLR front also. The numbers are not that good. Debt is there. So I think it's better to be in either Maruti or Bajaj Auto, which are better bet in auto or a auto ancillary space. You can have a look at PM Industries or LG Balakrishnan.
The next one is coming from Kaustubh. He wants a technical view on Zydus Life. Kunal, 52 shares at a price of 522 rupees per share. Wants to know whether it's the right time to average this counter.
Yeah, I think it's a good strategy to try and average Zydus Life. It had a very good rally from 380.85 to almost 430 or 425 or 430 thereabouts. And now the stock has corrected back to that 400 odd levels. I think it went to sub 400 as well, I think last week or so. So I think it's a good time where you can look to average closer to that 400 mark.
Okay, the next query coming in from Anto and Kunal. He wants to know the take on Redington. He's holding from a price of 162. We are seeing the stock at near its all-time high levels. What's the advice?
So if you are in from a short-term play, then I think from 162 to almost 180, 181, where the stock made a high today, I think that's a good level where you can look to book profits. My belief is that maybe these IT stocks can get into a mild correction for themselves before there is any major pickup of price trends back again. So if you can try and take advantage of maybe that correction, booking at 181 approximately for Redington and then coming back maybe towards 174, 175 is a good price where you can look to buy back again. If you can do that, then it's a good strategy. If not, and if you are not looking at it from a short-term play, then I think you can continue to hold on. You already have a buffer of more than 10% plus as a profit for the stock, so you can continue to hold on if your time frame is medium to long term.
All right, this one's come from Mayank. This one is for you, Rajesh. Nesco is the stock that he's talking about, 3,000 shares at a price of 620 rupees per share. He's asking how is the prospect for the next 3 to 4 years, and he wants to know if he should add on to some more quantity of Nesco in his portfolio.
See, for 3 to 4 years, you can get good returns even from the current market price. But adding more at this point of time, I won't suggest because markets are on a high. The stock is also on a higher level of its valuation. So maybe correction to 580, 600 odd levels would be a better levels to enter. At this point of time, hold on to your stock, but adding is not advised.
Okay, the next query coming in from Naveen, and let me take it up from you, Kunal. He's holding 500 shares of BEL from a price of 105, and you did touch upon the defense counters. What are the levels that he should be watching out for?
I think you should continue to hold on. It's going through a time-wise correction. I think the stock, this is the third straight month where the stock is correcting and consolidating between a band of 100 to 110. And that's always a good or a comfortable sign after a steep rally, more of a leadership rally for the entire defense name. The stock is going to a time-wise correction much before most of the other peers are. So whenever the stock breaks past or breaks out of this 110 mark, it could back again, come as one of the stronger leaders for the defense pack. So you should probably try and use this time correction. 100 could be a level where you can look to average further for BEL.
Okay, this one has come from TP Vinod. Kunal, is for you. He's writing to us from Salem and he wants a view on City Union Bank December futures. He's holding since the level of 192 level. Should he continue to hold on or book profits? And what sort of an upside target are you envisaging for this one for this month?
So it's a very high beta stock, first of all. If you bought at 192 approximately, the current rate of the futures is closer to 195. Yesterday's high for City Union Bank was around 200 mark. I think 200 or 201 was the high for futures, and the stock has corrected from that high. So these are rejection points which the stock is showing. So from 200, it's been unable to surpass about those levels convincingly, and now coming back towards 194, 195. So it makes sense to book profits over here and look to buy back again on dips for City Union Bank.
Okay, the next query coming in from Ravi, and Kunal, let me take it up from you. Ravi wants the suggestion on the entry levels for PNB, and he's looking for a swing trade with a profit margin of 5 to 10%. Can you give some suggestion?
See, the recent swing low for PNB was around the 51 mark. I think a 51 or 51 and a half was the previous swing low for PNB. So that's a point where you should probably earmark as a good starting point for PNB. If you're looking to average further, then maybe 48 could be another level where you can look to buy. So it's always makes a lot of sense to wait for that first phase of a sharp correction where the stock retests the first low. That's a point where you can look to maybe buy 30-40% of your expected quantity. And in case if the stock happens to come back to the second support level, which is around the 48 mark, that's the point where you can look to buy the remainder of your expected quantity which you're looking to buy.
All right, I have a lot of short-term queries actually, but let me take this one from Manjunath, and this one I'll take it from you, Rajesh. Latent view is a counter that he's asking about. 60 shares he has a price of at a price of around 495 rupees per share. He's been holding it since a year. December 2021 is when he acquired these shares. Now he's saying he's facing a loss of about 26% on his holding. He wants to know whether it makes sense to add some more of latent view right now with a 3-year horizon in place, or should he look to shift focus directly to the banking space, and in the banking space, leaders like SBI and ICICI Bank. What should his strategy be with latent view?
His strategy should be continue holding with your stock. The company is doing well. Maybe 420, 430 odd levels would be a better levels to exit. And adding new money at this point of time in latent view won't be advised. Yeah, you have chosen good stock in the banking space, SBI and ICICI Bank. Both are good. You can add, you can put your money into that.
That's the view coming in, but viewers, the time is still not over. But with this, it's time to slip into a short break. Coming back, we'll be taking up more of your stock queries.
To live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing...
मुथूट फाइनेंस पेश करते हैं गोल्ड लोन मेला। गोल्ड लोन लेने पर पाए सुनहरा मौका कपल्स के लिए फॉरेन ट्रिप जीतने का और साथ में जीते कई आकर्षक इनाम। यही नहीं, हर ट्रांजैक्शन पर होगा 24 कैरेट गोल्ड आपके नाम। अपने फ्रेंड्स और फैमिली को रेफर करने पर भी मिलेगा खरा सोना। गोल्ड लोन लेने के लिए आज ही मुथूट फाइनेंस की ब्रांच में आए या फिर घर बैठे बैठे गोल्ड लोन पाए। आज ही कॉल करें 1800-313-1212।
Welcome back. You're watching Buy Now, Sell Now on ET Now, and actually let me start with the rapid fire then with both of our experts, and let me take this one to you, Kunal. And this one is coming in from Richa, and Richa had asked a query on Schaeffler India, 3 shares at a price of 3,151 rupees per share. Good time to add some more at current levels for the long term.
Yeah, I think you can look to add at current levels.
Okay, the next query coming in from Hemant, and Rajesh is holding Union Bank at a price of 70. What's the advice coming in? Hold or continue to book some profits out there?
It's advice to book some profit and switch to SBI.
Amarjeet has asked a very short-term query, but he wants you to answer it, Rajesh. NCC bought at 78 rupees, 500 shares. Also, Ashoka Buildcon, he has about 1,000 shares. What should he do? Continue to hold on to it?
NCC, the hold Ashoka Buildcon, after 10% you can move out of it.
Okay, Alicia is holding Kunal Tejas Network from a price of 708. Look to average out?
Yes, look, you can look to average.
Okay, Tripta Aluwalia wants to know Kunal MTAR Tech at current market price makes sense to buy?
Yeah, I think at current levels of 1700, 1730, it's a good buy.
Okay, Mahalakshmi is facing a loss of 20% in NRB bearings. And Rajesh, is this a good time to average out or shift to Schaeffler India or SKF?
See, averaging is not advised, but being a long-term hold, I would suggest continue.
All right, Suresh wants to know about can he hold 42,200 call option Bank Nifty for this week expiry, Kunal?
42,200 call option Bank Nifty. Yeah, I think you can look to hold on.
Okay, Marula is holding L&T Technologies from a price of 3,000 rupees a share. Rajesh, a good time to book some profits or continue to hold on?
Continue to hold.
All right, this one is also coming in from Vinita Rai. ICICI Prudential 534 is a buy price, down about 11% from buy price. Kunal, do you foresee a bounce back?
Yeah, I think it's at a very good support point of 450. You should look to add.
Okay, Kunal, Sandeep is holding L&T from a price of 1750 and he's wanting to know good time to book some profits and switch into any other large cap names.
Current levels is good enough to book L&T and maybe you can switch to some other stock, some other sector, which is Reliance.
All right, and with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, as well as Rajesh, for joining us on the show, talking about the textile sector, which are your top picks, as well as resolving our viewer queries. And viewers, we are out of time on this edition of Buy Now, Sell Now. It's a goodbye from Srishti, myself, and the team that put the show together. But stay tuned, Markets at Noon is coming up next.
Giving you 25 rupees right now, after 5 years, each may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, each may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, each may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
sour mood continues on Dalal Street as global markets see mild profit booking and focus shifts to central bank action, while tech stocks see the biggest cuts. PSU banks buck the trend. Several small PSU banks gain anywhere between 1 to 5%.
The rupee weakens further to a one-month low, falls below the 82 level against the dollar, below the 50-day moving average as equity outflows and crude rebound gains.
Interest rates could go higher before cooling off, says famed value investor Guy Spear. He believes India is an exciting place to be for the next 5 decades and is betting on names like IEX and Care Ratings. Adds that the two companies are important participants in their respective segments and sees major scope for growth in both the companies.
TCNS Clothing is flying high after an Economic Times report suggests that AB Fashions is now the front runner to acquire the company in the deal that could be the largest branded apparel buyout by the AB Group. RBI's Monetary Policy Committee underway. The central bank is unlikely to pause on rate hikes in its last meet on the year. Experts believe that MPC could raise rates by 25 to 35 basis points. Good afternoon, and you're watching Markets at Noon on ET Now with me, Vinny Motiwala. Along with me is Anisha Jain as well. Very good afternoon to you, Anisha. Hey. And absolutely a new do-up for you, but markets seem to be in the same sluggish way we saw coming in yesterday as well.
Well, I think you hit the nail on the head. It's absolutely sluggish for the markets. While I'm trying to amp it up a bit, the market is not. 18,600 is where we are holding on. But remember, that's a very important support level for the markets. So 18,600 is something that we need to watch out for very closely. We are very close to the lowest point of the trading session, and today the market breadth too has inverted and is in favor of the declines. There's almost 1,200 stocks declining for around 800 stocks advancing. Sectorally speaking, most of the sectors are actually trading with a bit of a red tinge. It's only the PSU banking names which are showing solid outperformance. So whether you pick up a Punjab and Sindh Bank, Bank of India, Union Bank, UCO Bank, they're all up anywhere between 2 to 5%. Today there has been a positive note as well from Morgan Stanley talking about how PSU banking rally could continue, and that seems to be playing out in the markets. On the back foot today is Nifty IT, so that continues to be under pressure. And there was a risk-off mode across the globe as well. We had seen crude slip to the levels of around 83. You had the dollar index trading below 105. And of course, VIX continues to be on the lower side, and rupee too has weakened today. So it's a bit of risk-off mode, which is quite visible. And as far as the broader markets is concerned as well, we are witnessing that. Just a few stock-specific names before we move forward. On the gaining side, you also have names like Rashtra Chemicals as well as Equitas Small Finance Bank. Westline Foodwork is doing quite well. Plus, you have PNC Intratech, which is now trading high by around 5%. Actually, pull up the intraday chart of Westlife. Not really sure of something transpired in the last few minutes, but there is a definite spike there. So watching out for that particular counter, now 7.5% higher. And Easy Trip Planners, that continues to languish. There's a cut of around 6% on that one. But let's move on and welcome on board Mr. Himain Kaparia, the Senior VP Institutional Equity, KR Choksey. Himain, hi, good afternoon. Well, we are talking about how 18,600 is a crucial mark for the Nifty. What happens if we go below that, and what are the chances that we do that?
A very good morning to you. A very good afternoon to you, Anisha. Thank you for having me. I think valid point. Well, frankly speaking, Anisha, the markets are tired. They're overbought. Some of the mechanical indicators have already signaled a sell, and this is not only India. France, Germany, and USA have also. We should have been at least 300 points lower, actually. We've had a phenomenal run. We've run into resistance from its all-time high. Okay, we posted a new high, but that was just cosmetic. So we walked into the earlier all-time high. It's natural that we consolidate a bit. Okay, it's not much, but the VIX, which was around 13.5, has slowly crept up to 14. I don't think 14 is very relevant. Only if it goes past 17, do we worry about a bigger fall in the Nifty. But otherwise, yes, it's tired, stretched, overbought, needs to correct. And this goes for the Bank Nifty as well. But somehow, It's both have been resilient enough, and even just last week they posted fresh all-time highs. So frankly speaking, it's better to be stock specific, but yes, there's a distinct heaviness in the market, which I don't think is going to go away in a hurry. We need time price correction of some sort. Yeah.
Okay, that's the view on the markets, Hemant. Firstly, good afternoon. This is Vinny joining in as well. Could you talk to us about your top picks? I see one buy and one sell call coming in.
Yes, Vinny. These are trading calls. I have been bullish on IT for some time. Earlier on ET Now, I've given stocks like Tech Mahindra, Emphasis I gave last week, which did well. But yeah, currently there is some resistance. So firstly, a sell call on HCL Tech Mini at 1120, stop loss 1140, target 1080. The logic is that we posted a small lower top, lower bottom. You have the mechanical indicators giving a crossover sell on the daily chart. That too after reflecting a little bit of negative divergence. So it's not a major trend reversal yet. It's just a correction coming in from a shorter term point of view. The second one is a buy call on Voltas. This is a contra buy call, Vinny. We've virtually fallen off a cliff from 1350 to 800. Now we are deeply oversold. The weekly picture is turning flat from downwards. The daily picture has turned positive. And once again, crossover buys coming in from the oscillators. So we are looking at a bounce, and this bounce should be slightly more than a bounce. So buy Voltas at 850, stop loss 830, target 890. It's a modest target, I believe, which can get overshot.
Okay, Hemant, thank you so much for those top picks coming in this afternoon, and thank you so much for joining in with us on Markets at Noon. But let's move on and talk about a big interview that we did had. Now, the CARE Ratings is critical for India to make its mark in the global credit rating scene, believes a famed value investor and CIO of Aquamarine Capital Management, Guy Spier. Now, he explains why he's actually bullish on the companies. What is he talking about? Let's go across and listen in.
The leading Indian ratings agencies, other than CARE Ratings, are controlled by companies that have their headquarters in the United States. So if you take CRISIL, CRISIL's major shareholder, promoting shareholder is Standard & Poor's. And if you take ICRA, ICRA's promoting shareholder is Moody's, both highly respected companies that, in the case of Moody's, I have an investment in. And India is very lucky, and ICRA and CRISIL are very lucky to be able to draw on their knowledge and experience. But and CARE Ratings, which is not controlled by a foreign company, is local, I think is an extremely important participant in Indian credit markets. And the point that I've made, that I will make here as well, and I will make to any regulator that wants to hear me, is that it's extremely important for the future of India, I believe, that it has a local homegrown ratings agency that is not controlled out of Washington or New York or London. And to be slightly provocative, I think that it was an amazing moment in after World War II when India finally achieved its independence, and that was an enormous step forward. And I think that it's really important that India develop financial institutions that are independent. It would not be the vision and the fulfillment of the dream of an independent India is not completed if there aren't institutions in India which are independent of foreign control, if you like. So I am a proud shareholder of CARE Ratings, but I would never ever want to control CARE Ratings because I'm not Indian. And I think that CARE Ratings has an enormous way to go. I'm extremely impressed with the CEO, who've had some interaction with. So there is a lot of improvement, low-hanging fruit that CARE Ratings can make to reach parity with in quality and operational standards with the other ratings agencies. But it is imperative for CARE to do that.
That's a word coming in from Guy Spier. But shifting focus to the world of commodities, now there are two key concerns for crude demand: lack of clarity on the lockdowns in China and recession risk, says the biggest authority on energy market, Dr. Feridun Fisharaki. Stay tuned for he sees the crude prices headed.
Well, there are two issues with the demand side. One issue is, of course, the China issue. The China's lockdowns, the lack of clarity about what Chinese government is going to do. There are some indications that after the protests in China, that the Chinese government is going to ease the restrictions, and if they ease the restrictions, then the demand will grow faster. But it's not so clear exactly what the Chinese government wants to do. But we do know that as soon as the restrictions in China are lifted, Chinese demand can grow 800,000 to 1 million barrels per day next year. So it is very much, the world oil market is very much dependent on China, and China could make a huge difference in the market. So that's issue number one. Number two issue is there are lots of worries about the global recession. Are we going to have a deep recession? Are we going to have a mild recession or no recession? A deep recession is something like what we had in 2008 and 9, where the demand for oil fell between 2.5 to 3 million barrels per day. And the demand decline can be followed by a drop in the price of oil at $30, $40 a barrel. So very significant if we have that kind of a hit. But if we have a mild recession, the demand can fall 200,000 barrels per day, maybe 500,000 barrels per day, and the prices can remain not far off from where they are. OPEC Plus can manage. The policies of OPEC Plus is to manage. They're looking for a flat price between $85 to $100 a barrel. This is the range that OPEC Plus is looking at. There is a floor. If the prices go below $80 a barrel, they will cut production to boost the price. If there is a big recession, OPEC Plus cannot do anything because the demand loss is so great that there is nothing they can do. But if there is a mild recession or no recession, the prices go down because of sentiments, OPEC Plus can manage it. So the supply side can be managed by OPEC Plus. And the policies that Europe and the US have followed in terms of putting the restriction on the price of Russian oil is all nonsensical, and it makes no difference to their market. Russian oil will continue to flow, and the market basically pays no attention to what G7 is doing.
Presented by.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great.
Welcome back. You're watching Markets at Noon on ET Now. Let's keep it going then and move on to Morgan Stanley, who actually believes that PSU banks have been benefiting from the ongoing recovery cycle. Harsh is here to tell us more about PSU banks and what is Morgan Stanley's view coming in there as well. Harsh?
When I'm looking at what Morgan Stanley has to say largely, what they're suggesting is PSU banks are benefiting from the ongoing recovery cycle, that this particular cycle is showing that there is good loan growth and that will sustain going forward is what Morgan Stanley continues to believe. What they are suggesting is that credit costs, which have already been benign in Q2 of FY23, will continue to be so going forward as well. They're not seeing too much risk coming through, and they're expecting higher margins going forward as well. As we've seen the repo hike, NIMs will continue to improve is what Morgan Stanley is suggesting. What they are saying is Bank of India and Bank of Baroda have the best relative risk reward when it comes to the public sector banks even now, and that's what Morgan Stanley largely is outlining in its report.
Thanks for joining us with that quick take. So PSU banks rallying and Morgan Stanley has come out with a fresh note. In fact, Morgan Stanley yesterday initiated coverage on a couple of gold financiers as well, and they believe that Manappuram is likely to fare better given the fact that they're diversifying their exposure as well. We have Mr. VP Nandakumar, the Managing Director and CEO at Manappuram Finance, joining us now to talk to us about the dynamics of the business. Mr. Nandakumar, good afternoon. Thank you so much for making time and speaking with us. First up, just wanted to understand that the street is talking about the increased competition that the sector is facing, not only from banks but fintechs as well, and that's been pegged as one of the reasons why your yields have been coming off and profitability has been taking a knock. Your comment with respect to how competition is faring and the outlook for profitability?
Thank you. It is not because of competition. Competition is there. In all the sectors, competition is there. The NBFCs are also not accepted. So, from 2014 onwards, we have taken steps to diversify the company's business. It is one thing what I would like to say. We are becoming more than product centric to customer centric. Our customers are mostly from the lower end of the pyramid. They wanted other modes of finance also, like MSME or car finance, two-wheeler, etc. Apart from affordable housing, etc. That's why we thought of diversifying into that. Otherwise, what we have to do, we have to direct them to other companies, then go to other companies. Similarly, the microfinance, we are having a good understanding about bottom of the pyramid. We thought that we will start from the very bottom. That's why we entered there. So in all these areas, we have grown.